Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 2% there. On the S&P Nasdaq 2.7%, semiconductor 3.3%, Dow almost 2%, Russell 2000 same, transformative move 3% positive for the day. Banks up, energy up, biotech up a little bit, healthcare 0.5%. Home builders made a move today, led the entire market. Home builders along with the retail. These two guys are up about 4 to 5% today. Utilities up a little bit, emerging market up. Bitcoin, gold, silver, miners are down, dollar down, oil up, treasury bond down, VIX is down a little bit. Let's take a look at the S&P 500 ETF. Spider, 65-minute chart. Here, so this is where we closed yesterday, and looks like we actually saw that gap up, and I extensively highlighted the fact that buyers, the best case scenario, the best strategy is to gapping up above that midterm moving average, because that midterm moving average has been creating havoc for the buyers for the last 2 months or so, right? We talked about the midterm moving average. Every time we hit that midterm moving average, a big tankage did come about in the stock market. Well, this is the first time since the early April. As you can see right here, I can go back, show you guys. That's early April right here. There's a midterm moving average. There's another one here and here. So this is a first time where we see that the price is able to get above the midterm moving average, because the midterm moving average does carry impressive resume. And the best way for the bulls kind of jump over that fence was to gap up this morning, and they did it. It wasn't a big gap up, it's a smaller gap up, just enough to kind of avoid any kind of confrontational activities on that midterm moving average. On that first hour, definitely bulls pushed it, and pretty much all day long. In the last several hours, we did a little flagging pattern there. But what happened was, though, with that move, you can see there's a down gap, right? That was opened up on May 18th. So this is where it closed on May 17th, and then on May 18th, this is where we opened up. So we see that the down gap was opened up. So almost about, let's see here. Yeah, about 70% of that down gap was filled today. But not all of it, though. About 70% was filled. And keep in mind that there's another down gap from here. So that you can see, if you look at both of those gaps, you can see there these down gaps are still open. So this is when the down gap isn't fully filled, usually it's going to impact, because this is a down gap, and down gap wasn't fully filled, and it's gonna favor the bears in a traditional sense, general sense. It will favor the bears, so buyers will need to, fill this down gap, both of those down gaps, as quickly as possible. If not, bears might bring it down, probably eyeing on that 397 up gap that was opened up. And you can see all that moving average clusters right here. So that's kind of where bulls could kind of, should there be any kind of decline going into tomorrow, this is where, bulls really need to utilize some of these moving averages to surf it up and then get up and finally fill both of those down gaps. I'm going to tell you right now, though, as long as both of these down gaps are open, bears ain't going nowhere. Yes, today, definitely a victory for the bulls, right? And so something that I've been talking about is that bulls need a miracle. Bulls need something more than just a little bit move here and there. Well, if bulls really want to turn things around, I think the best case scenario is gapping up above, let's see here, about 411.5, 411.5, right? That might be the best case scenario. If we see something like that, definitely a miracle has happened. And stock God is helping the buyers in this vicinity. The problem is if we don't see a gap up and if bulls get up and just fill these down gaps, there's always a problem of not getting filled. Bulls are, feeling, incompetent once we get to the, gap area and missing some of those down gaps. If we see something like that, bears will bring, once bears sense that there's a weakness, not have to fill both of these down gaps, bears will bring it down and they'll bring it down hard because as of today, we're still in a midterm downtrend. Yes, we did break above the midterm moving average and the short term and the micro term. But remember, just getting above these moving averages is not as important as the trajectory of that moving average. If you've been watching my videos since COVID lows, which is 2020 March, I'm being fair here with the bears because I've said the same thing while the market was in a midterm uptrend. There were many, many times where that midterm uptrend or midterm moving average, was going up like this and then price got below it. And I said the same thing for the bulls. What's important is the trajectory of that midterm moving average, not that price gone below it for a day or two. So I'm being fair with the sellers here. Bulls, yes, they did bring it up above the midterm, but look at that trajectory of the midterm moving average as of today. Things can change going forward, but as of today, as of now, with the data that is at hand, it's still favoring the seller. So check out that oscillator. See if you can extract any more information. So something that I've been harping on for days, this entire week, is the fact that buyers need to bring that oscillator all the way to the top of his band. Because if you don't, you can see here last several occasions when that oscillator didn't go all the way to the top of his band, huge tankage came about into the market. Well, we still not quite there. You can see there's still a little bit of that space. Bulls need to bring that oscillator all, and I think the reason is because we made a really good move. 2% move is a pretty good move for the bulls, right? So I think the reason is oscillator understand that there's a down gap, right? So unless we jump over it or the gap is filled, oscillator is not gonna push that oscillator all the way to the top of his ceiling, understanding that those down gaps is gonna be a critical role for both bulls and bears. So we got a clear objective here. Bulls, no matter what, you must fill both of those down gaps as quickly as possible or gap it over, or bears will bring it down and they're eyeing on that 397 up gap that was opened up this morning. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good trading tomorrow.